What's up, everybody? This is episode 37. Thank you for joining me. I'm usually more excited because my platform usually killed it. Today, it was like 50% killed it and 50% struggled. And that's why today's lesson is going to be very specific. It's going to be on the proper way to average down with options. There's a lot of confusion. Even people that follow my platform, 349trading.com, there's some confusion. Some of you get too heavily levered. But first, my wrap up, and then we'll get to some questions. So today's market was green. However, some of you were red today. So let's get to why, okay? First off, Jumia, yes, I sold yesterday because I saw outflow. Now, the good news for you guys in Jumia, and I think we have an example to use from Russ later, is that Jumia hasn't had 4 consecutive outflow days in over a month, and now it's been 3. So basically, I'm using mathematics and data to tell you that I would be happy if I was still in Jumia looking for a rebound tomorrow. Same with Fisker. Fisker consolidated. Now, I'm specifically going to talk about my Fisker options because Fisker, I was in trouble this morning. I averaged down. It spiked up to $18.05. I got out of one of my larger positions where I held over 250 contracts. And then when it dipped under 780, I re-entered the same position. I saved 18%. So whereas I could be down 40%, I'm only down half of that. Now, the good news for Fisker also is it looks like demand might come back tomorrow. So I'm eagerly watching that. Let's talk about some other positions. Great opportunity. Tiger, same thing, great opportunity. Oh, let's talk about why some of your stocks are red. Because the stocks that I'm mentioning that have had great gains in the past week, people sold off and took profit. All right, today was like wishy-washy. So some people, if your stock was getting hurt and your stock was off 8-9%, all right, that's because people were taking profit and they were using that money to average down on the other stocks. That's why today's lesson is going to be so important, how to average down correctly on options, all right? So stick with me. TRIT, T-R-I-T, again, profit taking. XL, EBON actually made a little since we entered it. I gave an alert out. I think it was $3.36. We bought some options. I paid 92 cents, which is the mid price. And I think they finished north of like $1 or maybe 98 cents. So I'm up like maybe 5 or 6%. Again, that position going forward, I'm excited for. Okay, we're going to talk about lesson real quick. Using charts, okay? So real quick, if you use anything less than a one-day chart, you're making a mistake. Next, use a line chart to help you. Next, the one-day chart will tell you when the stock is spiking or in a valley for the day. Remember, we look for the sales to enter and we sell when it peaks. So that's why you use the one-day chart. Now, real quick, the 5-day chart. If you use the 5-day chart, you could put it up for any stock on any day of the week, Monday through Friday, right? What you want to do with the 5-day chart is you want to look at whatever the first day was and where you are now. If you are higher now, that is obviously a bullish trend. All right, over 5 days, your stock is higher. Simple as that. If you're using a 5-day chart and your stock started at 20 and ends at $19.10, it's bearish. It's going the wrong way. Okay, so that's the 5-day chart. Now, what I like to use is the 1-month chart. Why? Because the 1-month chart will show you volume and it will show you inflow versus outflow. It does, if it's red, there's more outflow, which is what I mentioned before when it came to Jumia and what I mentioned before when it came to Fisker, okay? There's outflow days. So I believe Fisker is consolidating at a lower level because it had a hell of a week or a hell of a run. I expect green tomorrow. Same with Jumia. It had 4 straight days, low outflow. So again, it's just looking for any little spark to help it take off. But we're going to talk about averaging down the right way today. Real quick, you must follow the rules. So if you're part of my platform or if you're not part of my platform, please pay the $3.49. Join for a week. Once you join, our retention ratio is like 99%, meaning people rarely leave. They find value there. Same value that I'm providing here, except for 20 or 30 times a day, I'm giving you small little lessons. So, okay, real quick, first lesson, don't have self-doubt, okay? If you're in a position and you bought it and it's down 20%, 30%, 40%, you're looking at your phone, you're like, it's still 49. What the hell is going? If you have self-doubt about your position, you're probably going to lose money. You're probably going to scare sell. You're going to sell to me. I'm going to pick up your options dirt cheap, and I'm going to flip them around. Or somebody else on my platform will pick up your options dirt cheap. If you're in my platform, we know what to do. So I talk about a rule, which I'm going to get to, about averaging down. But I'm going to give you guys specific examples on how to use the rule, when not to use the rule, and when to average out going out a few more weeks. Let me see if we're up to that. Oh, real quick. So one trade can blow up your account. This is more of a warning, okay? You could be crushing it for 5 weeks, 6 weeks. You could pick the wrong trade. You could pick an expiration like tomorrow. You can average down the wrong way, buying as it's going down, thinking you're doing the right thing. But at the end of the day, when the stock's at the lowest point, you've got like 198 options. You've got 98% of your portfolio in this one options play, and you're going to blow up your account. It's extremely risky. Then if you carry it over to the next day when it expires, right, then you're just looking to sell. So you're probably going to scare sell and blow up your account even more. So again, there are ways to blow up your account. Please don't do that. Please don't lever one position too hard, okay? One trade can kill your account. You could be 99-1, and that one trade can blow up your account, okay? And again, self-doubt. Please don't have self-doubt. I'm not sure why the screen just changed, but it did. If we can get rid of that other thing, that'd be great too. Real quick, let's talk about the UVXY today. Maybe we can get rid of that join our community. But let's talk about the UVXY today. It actually went down. So it spiked this morning. I bought some contracts. I did not alert it because to me, the spike wasn't great enough, but I did think it was going to fall and be around $31 by Friday. So the UVXY, I think it ended up down over 9%, showing market stability. Now you're saying, well, why weren't the markets up more if the UVXY went down? Again, it's showing market stability. It doesn't mean the markets are going through the roof. It means less people are buying put options and there's more stability in the market. So again, the UVXY went down 9%. My options changed today. They went up by 250%. So remember I was talking about YouTube yesterday and how we were looking to enter the UVXY today. Well, I screwed up. I'm admitting it in front of everybody, and people will rewatch this over and over and over. And I think this is going to be a really good episode because of the topic we're going to go over options and simplifying how to average down. But I'm admitting to everybody that I screwed up because I spoke about it yesterday. UVXY, I was buying puts. It didn't spike high enough. It spiked pre-market, and I was like, oh, please just hold on till market open. If it opens there, I'm shoving all my money in UVXY puts. But it didn't. It went down, and now it was down 2%. At open, and I'm like, 2%. Okay, I'll buy like 8 or 12 contracts. I don't remember how many I bought. I think I might have only bought 8. Point is, those 8 contracts made 250%. So I was right, but I was so frustrated because instead I got into 2 other positions today, and those positions struggled because there was more outflow than inflow. However, eBay, which is an alert on my spreadsheet, we're still holding on to those options which expire June 18th. All right, the entry was a $60 strike. The stock is like $67 or something to that extent. I paid $1.71, which means I'm currently up 300%. Platform members that jumped on that trade. Again, all my alerts, the ones that go on the spreadsheet, I'm very careful. So today I actually gave 3 alerts. Ebon, which is up like 5 to 8%. Tiger, which I think is actually flat. We paid like $1.90 for those. And the third one, which I can't remember because I didn't write it on my sheet here. All right, so we're going to get to my options lesson real quick. I'm going to take a sip of water. All right, options and what options are and how to average down. So I'm just going to simplify. Let me get rid of this. And then we're going to go into slides and then questions. But real quick, you guys wanted options. I'm giving you options. So real quick, the premise, if you're buying a call option, you want it to go up. If you're buying a put option, you want it to go down. That's real easy. Everybody gets that. Next, the sale. So when we look to enter into an options position, we look at the price and it says like $320 per one contract. And we say to ourselves, that looks good. I think I'll pay $320 per one contract. And then you say to yourself, no, Matt tells me I want it on sale. So you take 25% off of that $320 contract. You're like, that's 80 cents. I will put in a bid of $2.40. So we're looking for the sale. Now, one of 2 things is going to happen. Number 1, you get the contract. Congratulations. You just saved 25%. So right there, instead of being down 25%, like sometimes you look at your phone, you just made the thing. You're like, did my sale execute? And you're like, oh, yeah, it did. I'm down 12%, 18%, 19%. What the? So you're like, this time we're buying on sale. We're planning ahead. Okay, so you're looking for the 20 or 25% discount. Next, as soon as you get the contract, you're planning to sell it, all right? I don't care if you can't day trade. If you can't day trade, you take it out a day. Basically, if you paid, let's say $2.40 and you want a 50% profit, whatever profit margin you want, you multiply what you paid by your exit strategy. So I paid $2.40. I want 50% profit margin. 240 times 150 is 360. I put in my sell price for 360. If the stock spikes, somebody will buy my options. Keep in mind, it's us versus the institutions. When I say the institutions, 90% of their trades are through computers and algorithms. So that's why we plan ahead. If the stock spikes, the algorithm tells it our options are good to buy. Even if the stock goes straight down after we sell it, it doesn't matter. We're selling to the institutions. We're giving this to the institutions. So please learn to trade properly with me. All right. So I spoke about the sale, which gets us into the option, right? Then I talked about planning ahead. So I'm up to the main part, averaging down. So it's real easy, okay? There are many ways to average down with options, all right? First off, there's like a 25% rule that I've created, meaning when you buy your first position, say you put $2,000 into whatever option position you bought, and it goes down 40 to 50%, you buy your second position. So if you put in 2,000 first, you put in 2,000 second, all right? If it goes down from there, you can average down with a third position of $2,000, okay? You average down, you double up your position, okay? So the point is, if the option is $4, okay, $400 per contract, and you have one contract, that is $400. It goes down 40%, and you're watching it. You're saying, Matt told me to get it on sale. So I know it's down 40%, but it just fell out of the sky. It'll probably go down 50%, like 10 more percent. Options move very quick. So you're down 40. You might as well be down 50, basically. All right. I don't want you to overpay. So the point is, you bought one contract at $4. It's down to $2. What do? To properly average down, you buy two contracts. You put in the same amount of money, $400 at first, $400 at second. So now you have three contracts and you've put in $800. Okay. So your average is basically $2.70. Okay. It was $4. You bought one contract, you bought it at $4. The point is, if you didn't average down, say you know nothing about averaging down, or say you jump in a little too hard and you buy like 40 contracts at first and you pay $4, then you don't have money to average down, okay? Now here's the difference. If you buy that one contract at $4, it goes to $2, lose 50%, you buy two more. So your average price, I think I said, was like, what, $2.70, I think I said? Yes, that's about right, $2.70. So here's what happens. When the contract bounces back up, not even to where you first bought it, you bought it at $4, it bounced up to $3, let's say. So if you have your initial position, you're still down 25% with that one contract. Instead, it bounces to $3. Now you're already 12% positive. You have three contracts and you're 12% positive. So before, when you didn't know what the hell you were doing, you have one contract and you're still down 25%. Now you have three contracts, you have more money into it, and you're actually up 12%. Now, what happens when the contract bounces back to $4? Because we know the market looks to look like this and then recover. It sells your shit and it recovers. It sells your shit, you sell scared, and the institutions win. They buy your shit really cheap. So that's no good at all. So what happens is when it bounces back to $4, if you just had that one single position, okay, you'd be exactly even. You'd be like, okay, how much am I going to get? 20%, 30%? Oh, I don't know where to set my limit. I'm so happy that I'm even. But instead, if you bought two more contracts and you average down correctly, all right, so you're in at $2.70, it bounces to $4. Guess what? You're up $1.30. You're up like 40%. So instead of being even, now you're up 40%. And if we're my platform members, we plan ahead. So if a position is struggling and we're down 50%, as soon as we buy that contract and our average is 270, we use our calculator, we want 40%, $4.02. So we set the sell order at $4.02. We turn off our computer, and then we see the chart spiked again, and then it sold off at the end of the day. Well, when it spiked, we're out. So when I mentioned to you guys, I had Fisker earlier. I averaged down really early at 9:30 in the morning. I got some cheapies, I thought. When it spiked, I got out of my position. I had like $30,000. When it dipped and I thought the dip was good, I went back in a little too hard. So I'm feeling the pain right now. Why do I say I'm feeling the pain? Because I didn't enter at a 25% rate. I threw half of my position right back into Fisker, what I thought was the bottom, and I was wrong. It went down. So that's the point. You have to follow the rules. Now, let me tell you about averaging down again, okay? Let's say your options expire tomorrow, okay? If you're in the money, you can average down because you're looking for a spike tomorrow. If you're out of the money or your options are just close on the money, you're paying like 50 cents and it's like 2 cents in the money. You don't average down. You do not throw good money after bad. How do you average down? You have to at least go out a week. I suggest you going out to July. Anybody that was in Jumia this morning told me they were getting rocked. I said, here's what you do. You take the same amount of money. If you put $5,000 in the first investment, total, wherever you're at right now with Jumia, if you put $5,000 in, if you haven't done this yet, here's what you'll do tomorrow. If you put whatever you put in, $5,000, total investment in Jumia, you go out to July 16th or a date in July or August or whatever you want. You take the same $5,000, right, that you used for your first one, 5,000 more, you put it over there. So let's say Jumia only recovers 10% tomorrow on your options and you still have to take a 30% loss. You're taking a 30% loss on your first position. Your second position will be up about 15%. All right? Then you wait another week or two and it's finally up to like 60 or 70% because Jumia finally rebounded next week. There was demand. They're not going to sell the stock forever. It's been 4 straight outflow days. The point is, it's inevitable. So it pops back to $33.10. Your other position, your second position, is probably 60% profitable. So you have a position number one, you lost 30%. Position number two, you gained 60%. You use the same amount of money. So you're down 30, up 60. Net, you're plus 30%. Do you understand that? You took a shitty position. You averaged down by going out to July or out a couple of weeks. You threw the same amount of money at it, okay? 5,000, 5,000, 10,000, 10,000, whatever it is. I don't care if you're down 20,000, then you take the same $20,000 and you put it out in July and you buy some call options. And if you don't get the success tomorrow, you will get it in July or by July. I mean, we're only June, like second week in June, something like that. That's how you average down correctly. Now, when you jump in too strong, here's how you blow up your account. You have an account worth $15,000. It's all cash where you're like, yeah, it's all cash. Then you enter your first position, you buy in for $5,000. It goes down 40 or 50%. You bought in again. Now you bought in for 10,000 because you're supposed to double it, right? Now you're in for 10,000 plus the 5,000. You're all in. It sinks another 10%. Your options are basically down 40%. You're out of money and you're fully levered into a position that expires tomorrow. That's down 50%. You can't average down. If you could average down, say you had more money, okay? It's risky. But you average down, you buy the same amount of call options. You have 200 contracts, you buy 200 more. Now you have 400 contracts. You cut your price in half. As soon as it spikes 10% or 20%, you can sell all your contracts and you'd be down like 8% as an entire trade. 8% is a lot better than 40 or 50%. So when I mentioned this morning that I was doubling up on my Fisker contracts and when it spiked that I sold, I was taking a huge chance. All right. I sold part of mine. Part of mine didn't execute because I was asking too much money. I was too damn greedy. So I'm riding them into tomorrow. But the good news for me is, again, I saw 2 outflow days. So I'm thinking tomorrow's going to be an inflow day. Now, if Fisker is an inflow day, just like XL, if it's an inflow day, or NEO, it's an inflow day, I could expect those stocks to move 7-8%. 2 of those stocks are heavily shorted. Actually, NEO's heavily shorted as well. But Fisker's pretty high on the list. XL's pretty high on the list. So every time you saw Fisker almost rebound today and then struggle, it was because there was somebody short that was selling stock. I saw the little walls, and it was repetitive walls. Each one was a penny each. So let's go back to averaging down because some of you got it, some of you don't. All right. Next. So if your options expire 2 days out, boom, go out a couple of weeks. Now, if you're in the money, it's okay to average down because you feel whatever the stock moves tomorrow. However, if you have $34 calls and the stock is $32 flat, your calls expire worthless. So even though you're telling me, Matt, they're only 20 cents each, they're only $20 each, I could buy 100 contracts, and if it goes up 10 cents, I'm golden. That is true. And if you've done that before and succeeded with it, it's extremely risky because here's my assumption that I always make. And you guys love when I make predictions and assumptions. Here it is. Ready? I assume that the market's going to close wherever it is now. All right. There's only 1 day left. So when I'm looking at my Fisker options, I'll just give you an example because I know a lot of you are there with me. All right. My Fisker options, I'm thinking to myself, if I get the pop tomorrow, what would I do? So I'm looking for like $18.50, maybe $18.69. So my $17.50 options, I'll be asking $1.19 or $1.20. And my other options, I'll be asking maybe like 60 cents. I'm not saying it's necessarily going there. And if I see it go there, it could easily pop over 19. So I'm actually hesitant on that because if I felt the pain and suffered through the last power hour, I might as well get all the victory and all the reward. So that's always it. Risk versus reward. If you get beaten up and you're beaten up in whatever it is, Jumia or NNOX or EH or even Tiger went down today, or any of these stocks, any stock that you got beaten up with, right? And you're just looking to get out. You're like, I'm going to sell for the minimum loss. It depends where you're at in your position. I'm currently, the current position that I started on Fisker is down $5,000. I made $3,000 and change, like $3,600 in my earlier trade. So all in all, I'm down $1,400. Okay. Now the worst case scenario for me is I drop another $8,000 tomorrow. So I'll be down close to $10,000. Now the best case scenario is it pops hard and I make $20,000 or if not $24,000 tomorrow. So I tell you on every trade, and this is the same for options. All right. Risk versus reward. My downside, and I thought about it, is about $10,000. My upside, if I'm correct, could be about $20,000. The fact that I feel good about the trade and about the stock, I like risk versus reward, okay? 2-to-1 makes sense to me. If my upside was the same as my downside, I wouldn't be there and I wouldn't be talking about it. Or if I didn't think the demand could come back tomorrow, I wouldn't be talking about it. The reason I like to talk about it is lately, when I talk about a stock, the next day it actually does what I say, which is great. All right, so I think I explained options. I explained averaging down. I explained going out weeks, okay? Just because if your option, one last rule, if your option is on sale, it's under $30 or 30 cents per, contract. That's because that's what it's worth. It's probably going to end up worthless. So look to a lower price strike or look out to a later date. That way you benefit from the stock. When Tiger rebounded today, and I called that about a 50-cent rebound, which is like 3%, it's not massive, but from where it was to where it is, my option, which is a $30 call that expires in July, did not move at all. In fact, it made down the 5 cents that it lost. Now, the reason it moved is because the strike price is $30 and the stock is $26. It's not feeling the full effect. Its delta is very low. Now, I speak about delta. You should watch my option video. Now, delta, real quick, since we're here and we're talking about options and I'm still in the lesson, here's what you do with delta or to figure out how your option price is going to move. You look at the stock price, you look at your option. Now, there's a delta for your option. It's usually anywhere from like 0.17 all the way up to a full like 99%. It's telling you how much of the stock price you're going to feel for the option. So if your delta is 0.70 and the stock moves $2, you're going to feel $1.40. You're going to find $2 times 0.7, which is your delta, or whatever your delta might be, 0.5, 0.4, 0.17, whatever it is. The more out of the money your options are, the smaller the delta are. All right, more out of your money, you really need the stock to move to feel the movement in your option, to see that 100%. If not, it takes a lot to move it. All right, another lesson real quick, dipping your toe in, okay? So say you're like, yeah, I invested a couple $100,000. I'm going to buy 50 contracts as soon as Matt tells me, the next great position. So here's what dipping your toe is. It's just like it sounds. When you go to the pool and you dip in your toe, or you go to the bath, or you're in the ocean or something like that. You dip your toe in. You're testing out the waters. So you're going to buy 10 or 20 options at $3.40 because it went down. The stock went down. You're like, yeah, it's a bargain. $340. I'm going to buy 20 contracts. And you say, no. Matt told me, dip my foot in. So you change it to one contract. You spend $340, okay? Then you go back and you check your phone in about 10 or 15 minutes or your computer. Now, if you happen to be down 14%, 16%, 20%, whatever happens, because options move quickly and the stock market is volatile. So even though you think you're calling the bottom, boom, you check back, you're down 22%. Now, here's the catch. You just dipped your foot in. You are ready to buy 50 contracts. Instead, you only bought one. So you could buy 49 additional contracts at the lower price, down 22%. That's a sale, and you created the sale yourself. So I tell you, look for a 20 or 25% discount. If you track it yourself because you bought one option at $360 and you check back and it's down 20%, you're like, wow, I just saved myself. I was going to buy 50 options, 50 contracts. And I'm speaking to some of you. Those of you know who I'm speaking to. Those guys who go in and buy 20 to start or 40 to contracts or 80 contracts because you have the money on the side. I got it. You're playing with $30, $60, $100,000, $200,000. You're like, no, I buy contracts. I buy contracts by the 100. I don't give a shit. Buy one contract, dip your foot in. When you're down 18%, buy the other 199 contracts you're going to buy. And then thank yourself for watching this video right here. And do me a favor, subscribe. Hit the subscribe button or join my platform. It's $3.49 a week. Now, why do I make my platform $3.49 a week? when I share all this valuable information. Why do I make it 50 cents a day? Because I want everybody, their mother to join, their brother to join. The results are ridiculous. I show slides every day. If this is the first time you've ever seen me, please just go back and watch my episode from yesterday or the day before or the day before. You'll see I talk about stocks. You'll see the stocks react. I talked about XL. Boom, we made 150%. UVXY, 150%. eBay, like 300. I'm going to show you slides. Anyway, but the point is $3.49 a week, 50 cents a day to give you direction of the market. I'm better than the newspaper. I'm better than the Wall Street Journal. And then I teach you how to do things for free to simplify exactly what I'm seeing. Not to mention, I've been on fire for 6 weeks. So today was the hardest day for me because I knew some of my members were struggling this morning because they entered the wrong way. And I said, today's lesson, I need a long time to talk about it. I'm going to bring up options. I'm going to tell you how to average down. So you all should know there should be so many less questions about averaging down. If you bought 5 and it's down 40%, you buy 10. If you don't have the time, then you throw the same amount of money and you go out a couple weeks. All right, now let me just tell you what some people are saying. So some of you don't know who I am. Some of you see other videos out there. Now, most of the people talking are like AMC, GameStop. What happened to AMC? Down, 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 down. I warned it last Thursday at $72 going down. GameStop was over 260. I think it was 300. And I said going down. I don't know where it is. Maybe like 220 now. Who knows? Let's get to some slides, Boris, please, so I can share some knowledge here. I had to share this. My trading account is tied to my financial advisor's platform. He manages my personal pension. He called me to ask my account was spiking so hard. I told him about Matt and the 349 family, and he wanted in on the action. So yes, we've got a hedge fund, a couple financial advisors, some other investors following us. It's not a problem. They're not trying to steal or cheat us. We're all a family, and we do this together. So anybody is like, oh, he's in cahoots. I am definitely nothing like Jim Cramer or any of these other gurus you follow. I give you entry point. I give you exit point. I give you strategy. So you'll read it right here. The financial advisor is asking the dude why his personal account is spiking. And that's basically the norm. Here, next slide, please. Let's see. Next slide. Bro, your rules double my account. High ops displays, posting to Twitter, but wants you to know. Yeah, he wrote me in private. He doubles his account since joining the platform. So again, this happens to be commonplace because I'm on fire. My options alerts are close to 80%. Even when they struggle, they somehow reverse, and we're right because we average down. Next slide. Let's go through the slides a little quicker. I'm losing my voice. This dude has 39,000. He just became a lifetime member. He is crushing it over the past week. Looks like he made over 20,000. Maybe it says 29. I don't know. You guys can probably see better than I. The point is, we're been on fire. Now, how do we do this? We have a strategy. We plan our exit. So as soon as you buy something, boom, you secure 40%. You secure 50%. You're not waiting forever. You're not following or watching the stock like this. You plan ahead. You go to lunch with your friend. You go to the gym. You go to school. Whatever you do, you keep living your life. If you're sitting in front of a computer all day, then you shouldn't be. That is not how my platform trades. Yes, we have some back and forth all day, and there's good banter, and it's fun, but you don't need to sit in your front of your computer. You have a plan, and you execute. There's a strategy. I teach you guys to trade with math, not with emotion. We're trading against computers. So I mentioned this before. 90% of the trades that happen are computer-driven. Analytics. These companies spend hundreds of thousands of dollars to trade for them. They tell the computer what to look for. But the point is, we need to trade better than a computer. So right now, my strategy works. It's just simple fact. We've been around for a little over 8 weeks, 99% retention ratio. I expect everybody to join, $3.49. I show you results every day. Next slide. What's the next slide? I love these results. Oh, yeah. Cannot thank you enough. Your rules work. I'm up 13K in the past week, over 100%. Now, these things are daily. So when I post new ones every day, it's what someone sent me yesterday or somebody sent me today. I already have 6 for tomorrow. The rules work. We buy, we exit, we take profit. We don't ride an escalator or a roller coaster. We do not go up and down. My rules work. We take profit. Matt, I can't day trade. I don't give a shit. We had a guy $84 to $584. Yes, you, Romeo. Up to $2,100, and I think he's higher. Love down to 900. From 900 past 25,000. She was at 32 the other day, or 33. Her position might have struggled today, but she's longer term. The point is, it is possible. You take small little bags, you turn them to big bags. Yesterday, I showed slides. Girl said, almost up to $300, and I started my account was like this big. Yes, results. Next slide, please. I'm so great. Grateful. All right. Thanks, Education Alerts, man. Shit is seriously impacting my trading. I know you all can read, but I'm reading it myself. Utilizing the 349 methodology. So what I'm teaching you is averaging down, pumping your portfolio like a meme stock. That's awesome, dude. Next slide. The point is, I'm teaching you to be better traders. This dude, I could see this clearly. Past month. Okay, so he started trading my platform. He showed me the past month. He was at $5,200. He's at $27,000. Okay, we have over 850 members. Members rarely leave. We have over 55 lifetime members. That will be going on pause again soon. I pause it, I unpause it. When my calendar fills up, I pause it. When my calendar frees up so I can give those private lessons, I unpause it. Yes, we do have some available. It's the same way you signed up $349 for the platform. You cancel your membership and you sign up at the bottom of the screen for lifetime member. All right, so this dude made $5,000 to $27,000. I hope he's a lifetime member because he should be. Next screen, please. All right, yes, trade options. This is from yesterday. So we spoke about entering positions up 375%. So when I talk about TRIT, next slide, please. When I talk about TRIT, you had different positions here. Here they are. They all crushed yesterday, but we sell for profit. And then what happened today? Consolidation. I bought some options towards the end of the day. I bought some options at the beginning of the day, testing the water. Next slide, please. I tested the water. I bought a couple. This dude made 141%. Yes, it was a good play. Next slide. What else do I got? I got to have something else. UVXY, something. I mean, we were crushing. Oh, yeah, UVXY. There it is, man. So what was the return today? This was earlier today, just so you know, okay? All we do is buy puts. You've heard me say it for weeks straight. Whenever I talk about the UVXY, which is the volatility of the market, okay? We buy puts. It goes down. That's all it knows how to do. So it steps and repeats. Anytime it spikes, and again, this morning, I swear I wish it spiked higher because I would have put 30 grand in UVXY, and the money that I did put is up, 220 something percent. So 220%, I would have made more than that. I'm so upset it didn't spike harder. I really am upset. It got me all day. I've been frustrated about it. I'm like, I can't believe I could have really made a killing today, and instead I actually lost like 1,000, 1,200, or 1,400. All right, next slide, please. UVXY, anytime it spikes. All right, now this is love. I spoke about MSTR, which is like the Fort Knox of Bitcoin. So as Bitcoin goes up, this company goes up. It's like the Fort Knox. It's like owning gold. So she's been talking about this option forever. She was actually hoping the option price would go down so she could buy a second option because I think Bitcoin's going up. She thinks Bitcoin's going up. It's a great play. All right, next slide, please. Yes, sometimes these slides are mine. Sometimes they're not. This one was mine. This was FSR, Fisker, which I spoke about. So what did I do? I averaged down hard this morning, and I'm just showing you position turned green. Once it turned green, I put in my bid. My ask. I got like, 18%, 19%. I sold it. When it went back down, I bought more. Next slide. So I made 20% there. I lost 40% of my initial. You put it together, I'm about down 22%. This is this morning. I told you guys what I was looking for. XL cheapy. Didn't get struck. Gap didn't get struck. Oh, XL did get struck. I got some XL. I think it finished at 874. So I'm actually down probably like 15%. It's okay because same as Fisker, an outflow day. I expect XL to recover. Same with the whole sector, actually. The sector's been beat up. So watch it because those Reddit guys like to get involved with certain sectors. This is one of the heavily most shorted stocks, and heavily shorted stocks are moving lately. All right, next slide, please. Oh, and TYME is moving after hours. Remember time, probably like 3 weeks ago now, at $1.15, I said we could easily see $1.70. Boom, $1.80. Okay? So the point is, I do give you certain timetables. Now, we've all been in time a while. I was in time at $2.40, down to $2, down to, that was at $2.40 and $2, and then my average was it was $2.20 and then $1.80. My average was $2 on time, right? Then when it went to $1.15 and I saw the demand, I said, I am buying like 12 more positions. I had two. I bought 12 more. So I increased my portfolio substantially. And from $1.15, it's at $1.80. Now my price target, I'm going to give it away, I think is $3.99. So I'm holding on that. But what do we do today? So anybody that missed it real quick, I explained some stuff real quick. So the market went up, your stocks went down. It's a stock pickers market, industry specific. So I knew if your stocks were going down this morning, there was more outflow. Use that 1 month chart. So I gave a lesson about options, about charts, 1 day, 5 day, and 1 month. Use the 1 month chart to see inflow or outflow very early in the day. If you use Webull, if you use Robinhood, you could see it. You see inflow. You're like, my stock's only up 10 cents. How could it be inflow? It's telling you if the market's good and your stock is only up 10% and there's inflow, it's going to spike. So that's a good thing. Please use this. Real quick. I'm not a financial advisor, and we do this for free, and everything's organic. My platform is not free. It's $3.49 a week. But please pay this forward. If you're watching me for the first time, share this with someone else. Be like, this dude is for real. He's transparent. He talks a lot. He never shuts up, and he yells at me a lot. But I'm trying to get you to learn. I'm only here for your benefit. I mean, I'm here because I like watching myself. I'm not going to lie. This is great. But I'm also here to answer questions. So let's get to questions real quick. Hopefully you guys learned how to average down on options. All right, Caster. Great returns on your UVXY for what's from yesterday because that's when we spoke about it. Any thoughts on Jumia? Yes, so I spoke about Jumia real quick. I said it's been 4 straight outflow days. Volume is small. Now, volume hasn't picked up a lot. So I'm not saying volume is going to pick up, but I'm saying tomorrow could likely be an inflow day. So I would be holding on to options. If you need to average down, I would go out at least a few weeks. I spoke about that earlier. Next question, please. Again, most of these answers might be similar. Okay, ATOS. I don't know ATOS, so I'm glad this is a different question. But a lot of these answers could be similar when it comes to how to average down when you're asking me a question. Because if your stocks were profitable, then people took profit. Let's see. I typed in autos. All right. ATOS. And let's see. All right. We might have to come back to that question because I can't get to that stock now. So please, Boris, can we come back to that question? Maybe we can answer some other questions about what to do with specific positions. But for right now, my phone's next question, please. ATOS. No, it's not working. When it pops up, I'll come right back. Okay, did I do the right thing in averaging down? So here we go. You're down. Oh, I left out something about averaging down. So this will be a good lesson right here, okay? Let's start with the first one. Or let's go for all of them. You're down 40% on Ford, Carnival, Fisker. Okay, first about Ford. I warned yesterday at the beginning of business Ford could struggle, and we got the spike up to 1556 or 57, and I said, do your own thing, but I would definitely secure profit. So if you're still holding Ford, please be careful. I spoke that the Dow has been down 7 out of 8 days. Today, I think the Dow went up a little, or maybe it sold off at the end of the day. The point was the outflow was greater. So yes, I think the Dow actually went up today, but outflow was greater. So that's 8 out of 9 days. So please, Ford travels with the Dow. I do like Ford, okay? Now, I think Ford's going to be a $20 stock, and I would say it happens within 2 months, but I'm not telling you, ATOS is not coming up in my stock screen, so I don't know. I'm sorry about that. But Ford, please average out. Give yourself till September. Buy the $15 calls or the $17.50 calls. Give yourself to September. When Ford pops to 21, boom. So you're losing a little here. You make profit there. I spoke about it earlier. I would do the same thing with Carnival. My favorite Carnival play is September options. By September, they will be fully underway, and I expect Carnival stock to be somewhere between $50 and $55. I believe it's $30 right now. So again, September, okay? And Fisker 17.5 at 2.1. Again, Fisker, I already spoke about it. When I see demand, so I think Fisker, I think XL, I think Neo, CCIV, probably Workhorse, and a couple of the others will probably have their day tomorrow. Because if you didn't see, they all got beaten up today. I think some of them were down 10+%. So if your stock was down 5.5% like Fisker was, as little as 3%, I'm definitely expecting maybe an 8% move tomorrow. So that's what I'm planning. When I plan my exit, I look at the stock price and I say, okay, it's going to move 8%. So it's what is it? It's 1770 right now, or no, 1760. So 10% is 176. I take 20% off that. So I take off 34 cents. So I'm looking at about $1.20. So I say if it moves $1.20 to the north, that would be like what, $18.90. My $17.50 calls would be worth $1.40. My my $17. So I basically look for the value and I put what I think. I take a guess estimate. If you think something's going to move 4%, figure it out and plan ahead. That's how you plan to exit out of your positions. You can either do it that way or you do it by percentage. So if you're beat up in Fisker like me, right, you might say, okay, I'd be happy with break even. So I'll put in for the average. Or you'll say, I want to make 10%. I'll put in for the average, plus I'll add 10%. Okay? Everybody exits out at their own time. That's why I'm always stressing take profit, because if you take profit, what can you do? You can always re-enter. You can always re-enter at a lower level, unless you think this stock is just going to the moon and you're like, yeah, I knew that stock was going to go to the moon. Are you effing kidding me? No stock that anybody gives out goes straight to the moon. So when these other gurus are like, yeah, this one's going straight up, bullshit, man. Stocks struggle. There are steps. I mean, eBay looks tremendous. I'm not going to lie. I mean, I wish I put everything in. I mean, eBay is just tremendous. I mean, just goes up and up. I mean, it was $59. It's closing in on what, 67? That's $8. Has it been like 1 week, maybe 2 weeks? I think maybe 1 week. Maybe it's 2 weeks. I don't know. Next question, please. All right, Greg, my trading mentor taught you to take profit. Yes, I am your trading mentor. Hopefully that's me. 80%, yes. So when people are saying half the people are, this is why I'm so unbalanced today. Half the people are struggling at like 50% profit. I'm down about 12% because I bought, sold, and then I bought more too expensively. If I had waited, I'd be crushing it. And if I was in UVXY, like I said, I'd be even crushing it. Like I would take 100, 200, 300%. I would have made like 50 grand today. It would have been so much better. Oh my God, I'm so upset. Okay, so yeah, you made 80%. You bought back in. End of day, yes. So I wish I was like you. You are now my mentor. I wish I was like you. I mean, you bought back in. End of day. That's great, dude. And yeah, how far can it run? It was just so. Here's how I determine how far a stock can run. Sorry, I'll calm down for a second. How do I determine how? So it doesn't matter what stock. But let's talk about Fisker because that's what I seem to be harping on. And let's see if I'm right because I'm harping it up. I'm talking about it. Maybe it'll spike. So Fisker was just at $19 and changed the other day. It was after hours because Love mentioned, hey, do you see Fisker? And I think it was up 3%. Now, again, it's heavily shorted. So there is a short on the other side. But it could easily bounce hard, especially since I'm talking about 8%. I mean, I would never talk about 8% except for it was down 5.5% today. And I was expecting inflow to be greater in that whole industry. And it wasn't. Outflow for XL, outflow for Neo, outflow for Workhorse. Workhorse was like down 10%. There was another one, Ride, that was getting crushed. All right, so this one fell right in line. Fisker fell right in line. It wasn't like they were ripping it off. Those walls they were putting up was because somebody's computer was telling them the stock should be down 5.5%, not 4.5%. That's why it moves and you see a jerky movement. Any of your stocks, when you see that, it's a computer saying this should be more even with this. And all of a sudden you'll see a stock just sell off, whether it be Delta or Carnival. The same thing on the opposite side. You'll see like casino stocks. I looked at Las Vegas Sands today. Weird freaking chart. Same with Wynn. All right, so yes, I think Fisker could run. I'm looking for that tomorrow. I can see it run past 19. Any stock you have, if you look at it run. Now, I'm not talking about the biotech stocks that they send up 50% or 80%. Oh, Matt said it could retouch Clover's height or GameStop. It could go back 300. No, I'm talking about real stocks that move, that hit the market today. And let's say your stock was up to 13 today and it closed at 11.99. Yes, it could easily run to 13 tomorrow. It was there today. The demand was there today. If somebody decides to do their buying tomorrow, if an institution decides they're going to enter into a position because they see the value there and they think it's going 30% higher, yes, it could easily retouch whatever it was today. So that's what I'm talking about with Fisker. I just saw it. I was assuming today would be inflow. I was really hoping today would be inflow. I was assuming it was, and it was the beginning of the morning, which is why I doubled down. And then it went from more inflow to outflow, and we saw that because there was a huge sell-off. All right, next question. Sorry for harping again. Yes, this is my example. Russ got himself in some trouble. He bought himself. Now, Russ used to trade like $1,000 worth of a contract or $2,000 worth of a contract, and he needed to average down. He bought 3,000 more. Then one day I called him. I said, UVXY, buy 12,000. He averaged down. He bought 3,000 more. He bought 15,000. He made 9,000 on the order. He could have made double that if he held. That's why it's so important, Russ, for you to hold when you have the UVXY, because your contract didn't expire until next week. And you know how much your contract would be worth? Your 15,000? You would have made about 45,000 today. I didn't even think about that. That's why I was calling you not to sell. 45,000, because sometimes when you screw up and you have Jumia, you're in for 20,000. Boom, you lose 20. You must make max profit on the profitable trades. On UVXY, you must make max profit. On eBay, must make max profit. We didn't take max profit on apps, but we did on NNOX. We did on EH. I called EH at $25. It went up to $40 within 3 days. That's 60%. That's somebody who sees supply and demand, notes it, sees the pattern, shares the pattern. We didn't move EH. As a family, 800, 900 members, we didn't do it. But we called it 25 to 40. Yes, they sold off. There was consolidation today. Stock goes up 60% over 3 days. You got to take profit. These institutions that are getting wrecked elsewhere, they're selling EH to take profit. If it dips lower, they'll buy back in. Same with Tiger. That's what's been happening. Every time Tiger sells off, I'm like, it's a great opportunity. All right. So with Russ, I taught you how to average down before. If you really want to get dangerous, you're going to buy $40,000 worth of options tomorrow. You mentioned you have money on the side. You'll give yourself some more time. So you'll buy out 3 weeks, 4 weeks to July. And if the Julys are too expensive, then you buy out till August. All right, because maybe people are bidding it up because I keep talking about the July options. So give yourself more time. You're playing with a lot of money. Do you care if it takes you a couple extra weeks to get back your money or to make profit? No. All right, next question, please. Yeah, learning the hard way sucks. We never learn the hard way. Now, what if Russ jumped in with one option, like I talked about dipping your feet? If you missed the earlier lesson, please go back. Watch when I talk about options. It's very informative. I talk about dipping your feet. So instead of buying 80 contracts, which you probably average down, let's say the first contract you bought was one contract. He lost 25%, and he says, okay, I'm going to buy 9 more. Then he loses more. Then he buys 20 more. Okay, he doubles down. Now he's in for 30 contracts instead of 80. Do you see the difference about using the rules the correct way? We test the water. We do this. Then we think it's on sale. We buy 9 more. We're wrong again. We use the rules right way. We buy 10 more. Now we're in for 20 contracts. He's in for 80 contracts. Instead of being down $20,000, he would be down $5,000. Instead of throwing $40,000 at a risky position tomorrow, he could easily throw $10,000 at a risky position. And if he's right and Jumia pops 5% tomorrow, boom, he just made money. Not killer money. Now he's hoping that he does this, Jumia pops, and he recovers his money. There's a hell of a lot of difference. All right, Carnival calls. It's around $30. I think it's just under $30, maybe 1% under. So maybe it's $29.70. Yes, I like Carnival calls. You paid $1.03. I don't think that's that expensive. I think Carnival's going to move before June 18th. I know there's a whole week in one day. So yeah, 6 trading days. But yeah, I could easily see Carnival move 8 to 10% in the next week. Even if the Dow struggles, Carnival's going to move. My price target for Carnival I said was 55. So there's only one way to get to 55 from 29.70. It's to take steps. 8% here, consolidate 2%, another 10%. All right, so it's true. Again, if the market wasn't so beat up, certain stocks today, I forget. I won't talk about other stocks. It's not fair to my platform members. If you want to be part of my platform, it's $3.49 a week. When you join my platform, on the main page, it tells you play by play. So it tells you how to be part of private Twitter. If you join the platform, you don't just text me and say, hey, Matt, accept me. No, there's a step and a process. So I actually like your options. If you need to, you could definitely average down. You have 6 trading days. So, yeah, I think you're fine. We get the next question up there, Boris. Hey, Matt, what's my opinion on Wish? The 4-hour chart looks like a bull flag. Unusual options activity. Okay, so earlier I spoke about what charts we use. Number 1, we use the 1-day chart to find the dips and the peaks. Number 2, we use the 5-day chart to tell us if we're bullish on the stock. So I'm going to look at both those. Number 3, we use the 1-month chart to tell us inflow versus outflow. Now, I don't know Wish. Is that like context logic? If it is, I think it's a heavily shorted stock that people are playing around with. Yes, it is. Oh, right. This is the one I scalped from. I scalped from this one. Oh, it made 9 cents today. Okay. It made 9 cents on an outflow day. It can definitely be consolidation. There was huge volume for the last 3 days, like $90 million. So 2 things are going to happen. Either it's going to fill the gap back to like $9, or it's going to go up. And there's a good chance it'll probably go up because it probably would have sold off today. Let's look at the 5-day chart. Yeah, it's just consolidating, which means it spiked and then it found a level that it consolidated at. All the weak hands are out. They're selling, saying. Now, I told you, don't look at the 4-hour chart. That's so silly because the end of the day when there was massive buying, because probably people were expecting like good after hours move. Like, okay, I'll take a chance. I'll buy it at 3:30. If it moves 17% after hours, I'll sell it tomorrow morning. So don't get too excited on stocks like this where there's 94 million shares traded and the average is 18 million. There's obviously some manipulation going on. So actually, unless you know something about context logic, like they just want a government contract or they come out with this new technology that they're doing, I think they're just web software, like protection against like antivirus shit. I wouldn't be popping them so hard. They have a market cap of $6 billion. They have how many shares outstanding? 586 million shares outstanding. So it takes a lot to move the stock. So yeah, I mean, I would be more cautious. Let me just look at inflow versus outflow. I guess it's had inflow 5 straight days of institutions buying or large orders. But I guess people are taking profit as well. I wouldn't be involved with Ish. It could be dangerous. But again, it's risk versus reward. So if I'm telling you your risk on the downside is 10% and your reward could be like 40%, it's a 4-to-1 return. So yeah, I mean, you could take a shot. It's not my kind of stock because it spiked out of nowhere. If I knew more about it, I might be more informative about it. But without knowing that, just looking at the chart, I could say if you know it's a good shot, that your risk versus reward is like 4-1. So it's good. Next question, please. Okay, thoughts on Plug, $33 calls. Okay, so Plug is a different beast than Delta. First of all, Plug, let's remember, Plug was $19 and change, and then it spiked to $28. In fact, that was like, 2 to 3 weeks ago, and we had a good ride. We had a good scare, and then we had a good ride on Plug. We doubled down. We made a lot of money. However, there's consolidation. So Plug wasn't going to go back from $20 to like 77. Blink wasn't going to go from 30 to 50. There's always consolidation, and especially since there's big short positions in Plug and Blink. Now, my Plug options I have out till September, so I don't day trade them. I don't like sell at the high and the low. If I was more active and I didn't have this great platform that I have, I would definitely day trade a little more actively. Now, if you have $33 Plug, so Delta Airlines, unfortunately, airlines have just been beat up, but TSA is reporting great numbers, so I still like airlines. But the Dow, again, 8 out of 9 days has been outflow. 8 out of 9 days for outflow, which isn't a good thing. So let's look at Plug real quick. Let's look at the 1 month. There was more inflow today. So although Plug fell 3% today, 2.9%, there was more inflow. Now, volume was low. Just like yesterday, volume was low. The day before, there was outflow because I think it was a tough day. Then it had 2 good days before that, and before that, 5 bad days. So actually, I would be holding Plug. I know it's more nerve-wracking because you only have 6 trading days left. But you could easily get a pop of like 8% or 10%. And if you do, that's a $34 number. And your options, 33 is your strike price. So you prepare, you sell in the up. So whatever you paid, let's say you paid 50 cents or something like that. Every day for the next 3 days, I would put in a sell order at $1 if you had 50 cents, let's say. Let's say you paid 52 cents. I'd put in a sell every day at $1.04 or $1.05, 100% gain. Because you're looking for that one day. It just spikes one day, and it only needs to spike for like a minute. If it spikes for some reason, there's a news story or whatever, it spikes, then it reconciles back to 32. You're already out. Now, for anybody that doesn't plan ahead, and some of you probably have had this happen before, it's the elevator where it goes up. So you see your stock spike, you look at your phone, you look at what your option is, and you're like, boom, 180%. 180%. You're like, yo, 180%, 180%. And then you look back and the stock spiked down, you look, and you're 70% up. Oh, 70, I was up 100. It was so better at 180% than 70%. Now, if that's the case, please go back to this video, the beginning of this one, right? And watch when I talk about planning ahead, because you plan ahead for the gain. You watch the stock spike and you know you're out. You don't watch the stock spike and go, all right, honey, I can't talk. I got to enter my order. That's not what we do. All right, Delta Airlines. I'm going to look at Delta. Let's see what the volume is. I haven't looked at the Delta chart, but I know it struggled today, and I know it was off it goes back and forth. Yeah, so it's been heavy outflow for 3 days, and I think I mentioned this yesterday, and it was even less volume yesterday. Delta, I think yesterday lost 11 cents. So today it lost 24 cents. So yes, it sucks that Delta went down 0.5% today. But if Delta was going to fall, it would have fallen a lot harder. If institutions were going to sell their positions on Delta, now this is psychology behind trading. If institutions were going to sell their positions on Delta, they would have unloaded them. They would be like, Delta's going to 40. It's not. It's going to 65. And they know that, and they're holding their Carnival, their Delta, their Royal Caribbean, whatever it is. So many of these ETFs and these exchange-traded funds, the other fund. So, yeah, Delta's had outflow of 2, 4, 5, 6, 7, 8. 8 out of 9 days. Outflow is greater. 8 out of 9 days. Now, who do you think is selling? Because the stock's not going down more than 10 or 20 cents. It's weak hands. It's individual hands that were like, I'm going to buy Delta because Delta's supposed to go to 60. And when it doesn't go to 60, they do the same with DraftKings. They didn't move up. They sell. Delta, they sell. Carnival, they sell. Institutions are buying. When you see big buys at the bottom, it's not me or you. It's institutions that are holding on to it. And when Carnival spikes at $39, they'll sell it. They'll take the 30%. Not me. I'm waiting for 55. Maybe I'll sell at 39 like them and then buy back at 36, sell at 42, buy back at 39. There are steps. And there are patterns. So when I talk about patterns or letting it ride, and back to my Fisker or XL options, right? Here's the pattern. There's been demand for those stocks. Today was an outflow day for that whole industry. So I'm betting on the pattern that XL doesn't go 3 straight days with outflow because it hasn't done that in over a month. That Fisker doesn't go 3 straight days with outflow because it hasn't done that in over a month. That Jumi doesn't go 5 straight days of outflow because it hasn't done that in over a month. That's what you base it on. If I play you in basketball and I beat you, I'm probably going to beat you tomorrow too. If I run a race against you and I beat you, I'm probably going to beat you tomorrow. Now, again, if you flip the switch on me and you beat me in basketball, the odds are on you to beat me the next day. If you beat me in a road race and we run again the next day, you're probably going to beat me unless I do something to change it. History repeats itself. Next question. By the way, if I'm missing your questions and you want to ask questions because you got here late or you're at the bottom of the list, we have a little button on the side, I think, where you could tip like a few dollars or something like that. We use it for the platform. Again, I don't charge an arm and a leg. If I work for institutions, real quick, if I was working for the bank, okay, or any institution or hedge fund, they would be paying me $5,000 a week for my information. The reason I make it $349 is to get to the masses. I'm asking you guys to please share this video. If you're enjoying or you learned anything, and I know I delivered content on this, I think this video is going to blow up. So I'm asking you right now, I'm going to say in a prayer, please share this with like 2 people you know. Just be like, this dude talks about options. You were curious about options. This dude will explain options. And he talks about other stocks too. And he does it every day. I'm here every day. No other gurus talk every day. I mean, Jim Cramer does. He's not a guru. He's a sellout. So yeah, if you heard that and you think Jim Cramer's a sellout, give me the thumbs up. And please send it to 2 people. That's all I ask. I mean, I ask my platform members to do that too. I'm like, listen, I charge you like 50 cents. Oh, you made $6,000. Can you send it to a friend? All right, here we go. New stock. Sorry. I get sidetracked. You guys don't know that because I'm transparent and I smoke weed. It's crazy. I smoke weed. I forget shit. I'm talking about something. I'm like, what was I talking about? Oh, it was a good point. I can't remember. But yeah, I get sidetracked. The point is, when I send shit out of my platform, every tweet has a purpose. Every tweet's a lesson. Every tweet is something that I'm seeing that you might not be seeing. Now, it's not saying buy the stock or buy the option. It's saying, hey, look at this. Check out this wall. If this wall disappears, it's a good sign. If this happens, then this might happen. Always make predictions, okay? So that's what it's about. But please, join our platform. It's a family. It's great. Everybody helps us. All right, let's look at your stocks. Any, I think that was what, is that the 3D printer or something like that? If it is, yes, Sphere. It moves a huge amount today. I saw it. It went off it had no volume today. It had 200 million. Of course, it's going to spike. I almost bought some at 256. It's over $3. $3 I thought was the max. It beat $3. So these could be the same people that are investing in any or the same people that were in DDD. So if you look at DDD, it had some pullback today. So how would this 3D printing make 60% and the other DDD pulled back? There must be some news, huge volume. So yeah, I mean, what can I tell you? You should have been in pre-market. If you like the company, you should have been in pre-market. Lots, I think Lots went down. You're in at 633 on Lots. Again, with Lots, I think it moved a lot yesterday. Anytime your stock moves 20, 30, 40, 50%, first of all, congratulations. Second off, if you don't take profit, I can't help you. You probably shouldn't be a member of my platform. If you don't know how to take profit, you have to learn how to take profit. It's not like we're in a bullish market, but it's a stock picker's market. When I give you a stock and it moves, please stop watching. Take profit. All right. So car lots, I think it moved yesterday a whole bunch. It probably consolidated today. That's exactly. It consolidated for 2 days. It moved 3 days ago with massive volume, probably like 40 million. Yesterday looks to be about 30 million. And today was 7 million. But again, these are profit takers. They're getting beat up in their other stock. They held the stock. It was $4 and change. And they sold it at $6 and change. So you're in at 633. It's something to watch carefully. There's not enough data to tell you what's going to happen. There was enough buying 3 days ago to say that people actually thought enough of it to push it north of $7. So the good news is you'll probably get north of $7. And the day that it does move, you'll probably get north of like $8. So the day it moves to 8, secure your 30%. In fact, if you're in at $6.33, this is a lesson for everybody. This gentleman is in at $6.33. 30% is $8.23. So tomorrow when you wake up, I want you to put in your order at $8.23 to sell your stock. If it doesn't execute tomorrow, pre-market, during the market, or after hours, when Monday comes around, I want you to put in to sell your stock at $8.23, which is up 30%. Trade like a computer. This is how I trade options. You come up with a price you're buying at. It executes, your phone buzzes. You come up with a price you want to sell at. You put it in. When it executes, your phone buzzes. All you have to know, and this is the greatest thing about my platform, is you just made 20% or 40% or 80%. We don't sit in front of our phone. We trade with theory. So when I mentioned UVXY is going down, anytime it spikes, we buy puts. I don't care if it's going down 2%, 4%, 9%. If as long as it goes down and we're right in theory, we're going to make money. And then everybody has their own strategy. This is my platform. Everybody has their own strategy on exiting out. If I'm still in a platform, I will give that to you. I will be like, hey, I'm carrying these over. Fisker, I tried to sell some options at like 91 cents. They were going for like 81 cents. I thought it would spike a little more, 10 more cents. It didn't. and then it went down to 54 cents. And I said this. I said, I'm not selling because if I'm right, I'm going to get $1.50 tomorrow. So screw them. All right, I see we got a couple more questions. Let's look at them up, man. We're getting on fire. Hey, what's up, man? Roman, thanks, man. I traded the same 618 Delta Hopkins 4 times this week. You learned it like family. Okay, I didn't talk about this. One thing, learn a stock, learn an option like family. What does that mean? It means if you learn it like you know your little brother or sister, you know exactly what color hair it has. You know its range. You know Delta moves 3% one day. Every day, on average, 3%, right? So it moves, like 80 cents. So when it goes up 80 cents for the day, you sell your options. And then it goes down, and it's down 10 cents, and you buy more options. And then it goes up 70 cents the next day, you sell them. The point is, head and shoulders, learn a stock like it's your family. I don't care what stock it is. Last year, I learned WYNN, all right, WYNN. I traded it 83 times last year for 2,500%. All right, just the stock. Imagine if I traded the options, I would have traded them for like 25,000%. All right, next question, please. Good questions, man. Well, that was a real question. Matt, do I trade through an LLC to resume my tax liability? I do not. I let my accountant worry about that. I don't worry about tax liability. I worry about profit. I secure profit. See, here's the thing. Would you rather secure 80% profit and pay and worry about a tax on it and your other losses that you might have or gains or whatever it is? So you secure 80%. Or you tell yourself you're going to hold for whatever, and your position goes down to 8%. I'd rather pay the tax. I'd rather have my accountant get clever. Let's talk about accountants real quick. You know all these guys, Bill Gates, the Amazon dude, whatever, Bezos, they hardly pay taxes. 3 years ago, I think Jeff Bezos got $4,000 back on his taxes for his kids. Are you freaking kidding me? Jeff Bezos got $4,000 because he had losses in something. And they can't. Let's do 1 or 2 more questions. You guys are great. We're over an hour. I love you guys for staying. I'm not leaving you yet. Let's do another question or two. 2 more. Any thoughts on the SDAO? Yes, the SDAO has to go down. We saw it a little today, and then it gave it back. But we know people want to buy Dow stocks. We know that there is some value there. I mean, Carnival, all these stocks, these casinos, they just flicker with them. So, yes, I like it. But while tech is strong, the SDAO struggles. It's been a while since both markets gone up. Remember, we had markets that used to go up like 280 points. Now they don't go up like that. I don't know. All right, next question, please. I would be holding. Carlos. Hey, Matt's on fire. Thanks, Carlos. Thanks, everybody, for being part of the family. And everybody wishes for CJ. Yes. So thank you, everybody. CJ's have graduated. They went to it today. Carlos is someplace. And we'll see everybody later. Thank you, Boris. Thank you, everybody, for joining. We'll see you guys tomorrow morning.